Okay, hello. My name's Jim Brown. I'm the... which way is it? Forward, that way? Or just the middle one? That's it. I'm the strategic advisor to a thing called the Community Shares Unit, which is it's a project, or it's a unit now. It was a project funded by the Cabinet Office. Now it's a unit funded by the Department of Communities and Local Government. And basically our role is to develop the use of a particular form of legislation called Industrial and Provident Society legislation as a vehicle for raising finance for community initiatives and raising the finance from communities. So it's about community ownership, community control, and community finance. And this particular, the term community shares, we invented it because we thought most people looked at us in very glassy eyes when we said industrial and provident societies. They didn't know what we were on about. And they still didn't know what we were on about when we said withdrawable share capital. They were looking like, oh. So we did quite a lot of work on rebranding. This is work that started in 2009. The unit itself got funded just last year, so we're only just about a year old now. And what we do is promote we're trying to learn how to do it and how to spread that learning across all sectors. And we're using this particular form of share capital that's unique to this legislation. Industrial Provident Society legislation is it's corporate law, equivalent to, but completely different from company law. And the share capital, the shares that a society can issue, include this type of share capital called withdrawable share capital, which has got some amazing, unique qualities to it. First of all, it's completely non-speculative. It's not like, buy a share and tomorrow it's worth, 50% more than it was today, like with Royal Mail. The value is linked to the value added. The shares are based on, you can increase your share account because the society has earned money, the co-op has earned money, and it's paid some of that money to you as a shareholder in the form of interest, and you've kept that money in the co-op. So your share account would grow that way. But not because, somebody thinks it's worth a lot and the government made a big mistake in selling it at that cheap price. It's not a speculative form of capital. It's based on what I would call fundamental real value. And it's also democratic. It doesn't matter how much you invest, you only get one vote. And because of this and other features, another thing about it is that it's exempt from regulations, financial promotion regulations, because the purpose of this is not just financial, as you can see, it's also about community and social goals. The issue for us is that one of our prime concerns is protecting those exemptions. And essentially, we've got a deal going on with the government, which, and you can see here, but before 2009, there were probably about 2 or 3 examples of this a year, of people using this legislation to raise community finance. And, we're very indebted to bodies like Energy for All, who are the pioneers of this. But up to 2008, there were, the preceding 10 years, there's about 3 examples a year. Since we've started work on this, we've had this phenomenal growth, interrupted in 2012 when actually we weren't doing anything, but you can see this year we've had over 130 new initiatives set up, right? So today there's about 400 community groups across all sectors now. You'll see that community energy in a minute, I'll show you some figures, it is the largest sector. But this is not just something that communities are doing for energy, they're doing it for all sorts of areas. It's the new emerging business model for communities. Yeah, here we are. This is just to give you some basic stats. You can see there, energy and environment, you're about 1/3 of the market for us. Community retail, that's always been a bedrock. People losing their basic services in not only rural communities, but also in urban communities. We've got, shops in towns like Leeds. Pubs and brewing, football. All sectors really can work with this model. And so over the years, we've had about 400, since 2009, we've had 400 new societies registered, and 130 of those have completed a share offer, right? And back to this thing about, one of the things that we're trying to get the government to acknowledge is this big gap for pre-starts, yeah? That it takes a lot of time because it's quite expensive to develop these things. If you're going to raise money from the community to develop new business propositions, it's an expensive process. And there's a big issue about how do you raise the resources for before your investment ready. How do you fund all of that work? And that's a key consideration for us. But you can see the sort of scale of things. I mean, whilst typically we're not talking about massive schemes. The average offer has raised 200,000. And you'll see, actually, if I just switch over, I think I've got some figures here on, this is on community energy projects. Since 2009, there's been 37 offers have been completed. We've got 3 live at the moment, including JCC, who are on one of our, I'll show you relevance of that. This, again, since 2009, £13.5 million raised in equity. And, there's a little presage to what Claire's got to say. I mean, one of the things that we see equity as absolutely the bedrock of finance for any enterprise, including co-op and community enterprises. We see it as a bedrock because that levers in debt, it levers in grants, and all enterprises need a financial capital mix, so you can have appropriate things. Without equity, though, that's the foundation for all finance, and that's why it's so important that we concentrate on that. But I mean, you can see from these figures here that actually we're talking about, by and large, quite small, very local initiatives about genuine communities coming together to start to engage with the issues of climate change and how are they going to tackle it. So it really is genuinely small scale. This is it's Peter Capen here. I believe you. I'm indebted to you for this slide if you are here, Peter. This is showing. I mean, he's reworked some of the data that we provided him to show the number of societies that have been registered since 2004 and the numbers that have completed a share offer in the same year. And again, it's just emphasising that issue about how much work is involved in this, that there's quite a long lead time. So, we can see that the pipeline, the new projects that are under development, we fully anticipate very significant growth over the next 5 to 10 years as those societies that are starting out, the pioneers, are doing the pre-start work and getting investment ready. We're expecting to see very, very rapid growth over the next 5 to 10 years. Yeah, I mean, here are the 4 basics. And, when we work with groups, lots of people, the big new thing for them is all about the money side of it. And we're very keen on the money side. You've got to get the business model right. Without that, you're a non-starter. We're very clear about the need for good governance and having good legal models for people. And, of course, all of this should be crystallized in when you're trying to raise money from the public in a very clear and simple to read, non-financial, non-technical offer document that people can understand without being sort of dazzled by your financial technicalities. Because actually, of those 4 pillars, the thing that's most important for me, the reason why they work or don't work isn't because of the business model. It's essential, but it's not the thing that makes it. Not because of your governance, not because of your great offer document. It's to do with community engagement. Unless you get the community engagement right, then none of this works. So it's about involving people. Involving people and helping them understand the business model, helping them understand what they're investing in, and engaging them in the governance of society. One of my big ambitions for community energy is that we really start to expand and develop the business model. I would like to see much greater connection between generation and supply and addressing the key challenges that we face with climate change. And I think we've made some good starts, but we've got a long way to go yet in terms of developing the business model, lots of how communities can truly engage with these issues. So this is just describing who we are and what our role is. I mean, we're funded at the moment by Department of Communities and Local Government, but we have a steering group that has sort of 3 tiers to it. We're sort of like, there's an operational tier. So on that we have represented DEC. They're involved in what we're doing. DEFRA, DCLG is another operational department, and DCMS. At a regulatory level, we're we have on board the Financial Conduct Authority, the HMRC, and the Charity Commission. And then at a policy level, we have the Treasury and the Cabinet Office overseeing what we're doing. Now, I say all that because one of the things that we're very, very keen to protect is our ability to do this in a very low-cost, easy way. And essentially, these community share offers, they're unregulated. If we had to follow the financial promotion regulations, the cost of a share offer would be roughly £50,000–£60,000 as the minimum. And if you look at the scale of many of the projects we're talking about, they're only trying to raise 150–200,000. It would be completely out of scale. Now, the government's happy for us to do that. The FCA is happy for us to do that as long as we maintain good practice. You know, that we do it, you know, we don't eat through our enthusiasm, rip people off. So a lot of our structures is about trying to create an environment where we can sustainably go forward on all of this. And there are key ingredients to how we do that. How do we bring supporters, advisors, and enterprises together? And these are the 5 sort of work streams we've got. We're working on market development, and community energy is an important one for us. We see it as a separate sector. We've been involved in, as I'm sure many of you have been, with the consultation with DEC on how to develop this sector and what the key developmental issues are. Our big one, though, right in the middle there, is a quality assurance. And one of the things we're doing right at the moment is writing a handbook that's being overseen and supervised by the Financial Conduct Authority on how to do this, how to raise capital from communities, with the hope that that will become the basis of a good practice guide for all practitioners out there. There are lots of key issues in this and developmental problems that we're encountering. You know, I can give you a flavour of a couple. Joint ventures. We need to take a position on joint ventures that works across, not just for community energy, but for other sectors, because that is a sensitive matter. To what extent, how much control does a community need to have over its own investments? Another one would be community benefit. What's a good way of reporting what community benefit is? And how does that compare with the financial benefit for investors? And these are key reporting matters for us. One of the things that, a lot of what we're doing is about market intelligence and developing an understanding of it. As part of that, we've bought a crowdfunding site, which we're running on a sort of research basis at the moment. We have JCC are up there. By the way, please support it, because it's interesting. Everybody knows solar, everybody knows wind, but more people know hydro. But with solid fuel, with wood, people are going, and the innovation really requires support. Whilst you're up there, you can also see, we've got pubs, we've got piers, so there's lots to invest in. And I think that's really it. I must shut up and let you have a bit of time for questions. This is just a little bit about how we might be developing best practice, a bit about we are going to be launching practitioner training, handbook, and really it's about helping groups do it for themselves, and that's my contact details. I think these slides will be made available, won't they, after the event, so thank you.